Good morning, investors and traders. In today's segment, we'll be talking about Ethereum's bear market. Yesterday, I tweeted something really important about a bullish pattern which didn't really happen. Now, Ethereum is firmly in a bear market territory, and the question really is how low it is really going to go, and if there is still hope left for bulls to see another rally. That is exactly what we'll be covering. A bit about myself before we continue anything further. I come with a 15 years of experience. During this time period, I've worked as a hedge fund trader for Bank of New York Mellon and with Bank of America. Nothing can be discussed, conceived as an advice. The full disclaimer is right in front of you. And folks, if you haven't subscribed to our channel, please subscribe to our channel. Please do so. Good morning, good morning, good morning to investors and traders. This is Naeem Aslam, and in today's segment, we'll be talking about Ethereum's bear market. Yesterday, I tweeted about a bullish pattern which didn't really happen, and now Ethereum is firmly in a bear market territory. The question really is how low will it go, and if there is still any hope left for Ethereum prices to move to the upside, and then where are those particular price levels. So that is exactly what we'll be covering in this video. Before we do anything else, let me just go through this disclaimer. Anything which will be discussed cannot be perceived as an advice. Now, folks, a bit about myself. I come with a 15 years of experience. During this time period, I have worked as a hedge fund trader for Bank of New York Mellon, as an equity trader with Bank of America, and currently providing services as a chief analyst to EverTrade. Now, if you haven't subscribed to our channel, I highly recommend you to do so and also smash that notification button. Why? Because markets do constantly change, and that means you need to be aware of the most up-to-date information when it comes to the price action. Today, we're going to keep it very much to the point, so stay with me as we continue. So initially, we're going to look at the Ethereum's daily price chart. On the daily top price chart, we have three different moving averages. This is your 200, this is your 100, and in pink you have your 50-day simple moving average. The general concept is as long as the price continues to stay above these moving averages, the bullish trend basically continues. As long as the price stays above the 50, that shows that the bulls are very much in power. The moment the price starts to break below the 50-day simple moving average, like it did over here, it shows that the bulls are losing strength, and then a break or a violation of the 100-day simple moving average further confirms the same message, that meaning bulls are losing control fast, and the moment the price breaks below the 200-day simple moving average, it becomes very much official that now the price is completely in a bear market territory. And usually speaking, the bear market territory is when the price falls more than 20% from its recent high. And with respect to Ethereum, we can clearly see that that has happened a long time ago. Why? Because the recent high was nearly around 4,426, and that happened a long time ago. Why? Because currently the price is trading at 2,140. Now, yesterday, the price sort of fell sharply over the weekend, and it violated the low that we've experienced last week. Last week on Monday, we know that the prices were very much under intense selling pressure, and we were talking about when the prices were coming in around this particular area that perhaps the price could potentially be forming a double bottom. A double bottom is sort of a pattern when the price kind of forms the same bottom. It confirms that yes, a bullish pattern is formed. So basically, price comes over here, price comes over here, and then again the price sort of, now imagine that this is like 1 week or half an hour, whatever it is, but then in this, so and this is your sort of a zone, then the price once again comes into the same area, into the same similar sort of a price action. So then we have what? We have a one bottom over here, and we have another bottom over here, just like over here. We had the first bottom, and then the price was coming into the area, forming the second bottom. But under these circumstances, these patterns are usually classified as a very, very bullish patterns. But this didn't really happen yesterday. The price continued to move to the downside, and this very much confirms that, okay, you know what, bulls are still not in control of the price. We are very much likely to see more of sell-off in the market price action. Now, two things are still working in our favor, and then I'll explain that to you right now. And of course, guys, if you like the content, if you like what we're really talking about, please smash that like button as well. Now, what are the two things which are still sort of working in favor of bulls? Number one is that these double bottom, which I've just mentioned over here, they don't really, let me just actually draw that once again. So let me just zoom in. So the first bottom being over here. So these double bottoms, they are not always a sort of have the exact price level. So you can give up to 1% of a leeway. So basically, if the price over here was about 1850, so you can produce a sort of a 1% leeway, so which is we are still within that range. So that still doesn't necessarily completely rules out that double bottom over here. Now, the thing which is really going to give us a clear confirmation of that double bottom will only be once the price breaks above the 100-day simple moving average, and secondly, it breaks above the highs of yesterday. So these two price points are going to be very, very important. Now, if the price doesn't break that, then what we are going to see is the price coming and challenging the 200-day simple moving average. Now, remember, the first thing is that yes, the price is still sort of the double bottom isn't still fully ruled out. And the second bullish thing that I've discussed earlier, or I've mentioned earlier, is the fact that the price is still trading above the 200-day simple moving average. Tell us what you think about it. Tell us what are your thoughts about this. Are you long on them? Do you want it to see the prices falling more, or do you want it to, or do you think that now that the sell-off is very much over? Now, one more point about that reversal really taking place. The bulls are still somewhat catching, having that opportunity to buy Ethereum while it is cheap comes from the fact from this particular indicator. Again, guys, just a quick reminder, continue to subscribe to our channel because these price actions, they continue to change, and then that means you need to have very much up-to-date information. So the other thing which is really working in favor of bulls is that the price has pierced the Bollinger Band. This is your Bollinger Band. This line and this line. This is your upper line. This is your lower line. And this is your 20-day simple moving average. The price is trading very, very far in relation to where the 20-day simple moving average is trading. So 20-day simple moving average is here. The price is trading over here. Usually when the price trades that much away from it, it usually will reverse back towards its mean, and that mean is your 20-day simple moving average. So this very much confirms to us that yes, the prices are likely to move back towards this particular price action. The prices are very much moving back towards that 20-day simple moving average. So that is what we are very much focused on for the time being. So overall, yes, the bulls have lost control. There is no doubt about that because the prices are trading below that. But we are hoping for the price to break above the highs of yesterday's candle, and that will happen before the price will break above the 100-day simple moving average. And two important bullish points which are still there is that the double bottom isn't really fully ruled out. Secondly, the price is still trading above the 200-day simple moving average. Thirdly, more important, that the price has pierced the Bollinger Band quite a lot, and the momentum towards the 20-day simple moving average is trading. And finally, a big bonus one is that the RSI is way oversold, the relative strength index. However, having said that it is way oversold, it still hasn't reached, it can continue to move to the downside, and RSI can actually go all the way to 20. We have seen that back in February 2020 when the massive sell-off happened, so it can still move to the downside. Overall, we can say that the RSI is very much oversold as it approaches near 30. That's all for now. Thank you.